As we speak, we also have Abneesh Roy, who's the Executive Director, Nuvama, for Consumption and Research, joining in. Abneesh, it's a quarter which is in transit. What is it that we can expect in terms of outperformance from a couple of companies, and the one or two things that you'll be watching out for from management commentary?
Yeah, thanks. Good morning. Yes, today the FMCG results will start, and Nestle clearly under Mr. Manish Tiwari, this will be the first quarter. So from a top tier performance in Q2, we expect Bikaji Foods, Marico, Tata Consumer, Pidilite, United Spirits to be the star performers. And laggards clearly wherever the high rains have impacted and GST impact is on the higher side. Such companies will be Imami, Colgate, United Breweries, Varun Beverages, Godrej Consumer, etc. Coming to Q3, my sense is we will see good news coming back. See, Q2, as Mangalam highlighted, is not the right quarter for staples, especially because first 2 months there was a recovery. But from September 6 to September 22, there was a 4 days kind of an average impact on the sales because of the GST transition. So basically, whatever number comes today and next 2-3 weeks, basically there will be almost -4% kind of impact because of the GST transition destocking. And that's why that's not the right number to look at. We do see in Q3 grammage addition coming in lower unit packs, affordability in the bigger packs, and of course, some level of restocking will happen. So our topics will be essentially the food companies. We like Bikaji, we like Britannia, Nestle, we also like Hindustan Unilever, and discretionary we like definitely United Spirits. We also like Asian Paints and Pidilite. So those
Got it. Surprising that you like Asian Paints right now, because most on the street are still, not very positive on Asian Paints, given the sort of disruption that there is right now. But I take your point, Abneesh, not the perfect quarter to look at, but the third quarter will be extremely crucial. Volume growth expectations. What are your volume growth expectations from the second half of this year, largely because there would be that additional grammage impact coming in as well? And what are your margin expectations? Because even though raw material prices are volatile, they've not seen a big surge. Do you see any room for margin expansion from here on? And how are all of these, when you look at the valuations, how are these placed for the entire pack on the whole? Because valuations, while they're lower than their 5-year average, they're still, pretty much in line with the sort of performance that we've seen over the last 3-4 years.
Yeah, good question. See, from a GST 2.0, clearly from a food companies, I think the impact is on the higher side in terms of benefit. So that's why Britannia, Bikaji, Nestle will be the bigger beneficiary. The simple reason is the 5 rupee, 10 rupee pack grammage addition happens, and consumer buys a pack of, say, bhujia or a biscuit. He doesn't buy a grammage of, say, 100 grams. So the real consumption boost will be there in such packs. Unlike that, in Colgate, if you see, yes, 30-40% of Colgate is also lower unit pack. And initially, they will also see the grammage benefit in those packs. But in a 1-year perspective, those things will normalize. In toothpaste, that's why I don't see too much of a direct benefit of GST 2.0. On the flip side, Colgate can see some impact of the inverted duty structure. So coming to margins, it's a function of operating leverage, it's a function of raw material, and it's a function of GST 2.0 inverted duty structure. That's why I'll be cautious on Colgate. In terms of benefit, I think clearly operating leverage benefit will come in Britannia. My sense is Britannia can touch double-digit volume growth also in H2. So basically from October 15th is where I think the recovery for FMCG, restocking and the normalization is going to happen in most of the categories. So that's why Bikaji, Britannia, Nestle will see a good uptick in terms of volumes and some level of margins. I don't think companies will retain any GST benefit, but operating leverage benefit will come for Britannia, Bikaji, Nestle, etc. in H2. So yeah, we are positive on those 3 names from a valuation perspective also.
All right, it's Diwali. So let's talk about the drinks. What do you like out there? We have a trailer coming in, I think, from JM Breweries as well. Those numbers look good. Obviously, it's on a smaller base. But how you approach this space? Are you enthused?
Yeah, we are seeing a trend reversal there. So in United Spirits, if you see Andhra and Karnataka really firing, and in Q2, those 2 markets have really helped in spite of decline, almost high single-digit decline for spirits companies in Maharashtra, and some companies double-digit decline in Maharashtra. Karnataka and Andhra are making up, and from a H2 perspective, you're absolutely right. Disposable income will definitely increase, and that's why I think spirits companies can benefit. Second, of course, is United Breweries. Q2 will be quite weak because of the very high range. We expect -2 India volumes. In fact, in H2, we expect recovery there because Maharashtra, as I said, spirits is seeing almost double-digit volume decline. Beer is starting to see the benefit. It has not come in Q2. It will come in Q3 and Q4. So we are positive on United Spirits from a Q2, H2 perspective, and United Breweries from a H2 perspective. Q3 will be weak for United Breweries.
Okay, cheers to that, Abneesh. Always good to hear your thoughts. You're optimistic on Asian Paints, United Spirits as well, and mixed trends coming in for the FMCG pack. We look forward to hearing from you as the numbers start hitting the screen, Abneesh. But thanks a lot for joining in today. Well, let's slip into a short break. We'll focus more on the markets as well as on stock-specific actions. Stay tuned.